Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about thing that actually is happening this weekend that's major mover for some of the most important stocks in the market for the upcoming week. We're going to talk about the news.
Oh, really? Oh.
Yeah.
Two Super Guys Trade Stocks.
As you
So,
can see,
dun
I really
dun
don't know what's
dun.
happening.
Yeah. Rebalancing. What in the hell is that? And why does it matter? Okay. So it's been an
Oh,
epic goddamn year, right? For the Nasdaq. 42% up this year. That's freaking insane. All right. Especially when you have a tightening monetary environment. And we've talked about this a little bit before too. Don't forget that a lot of this is really concentrated in just a handful of names. Okay. This is the current weightings of like these major tech cap stocks, all right? The top seven. This chart right here is a little bit older, but basically it's trying to show you how much of the returns are proportionate to these stocks. Okay, yeah, this is like completely out of date, but at the time the S&P 500 had returned 7.5%, and over 7% of that had come from like just these handful of names.
yeah.
Remember
I
that we
mean,
talked about this before?
it skews everything because you think one, we're past the bull trap situation. We've gone way too high for this to be a bull trap. Doesn't make any sense. But it's still pretty wild. Like it's like four companies that are just dominating.
Yeah. So that's what they're trying to fix this weekend. Is they're going to try to chop back a little bit, right? This is another example of just how outsized the gains have been in some of these companies. What do you think about that?
I mean, I hate that I can't believe Tesla is in the same group as that, but all right.
Yeah, yeah, and NVIDIA too. The two very, very high multiple stocks that are making up a big portion of this.
I
We've done videos on
agree.
them individually, and we both have lots of great feelings. But
I agree with Nvidia being in this group, just to be clear, because they make one necessary component. They make the oil of like 80 years ago. So,
okay,
it's important.
fair enough. But you're looking at the whole market, I mean, up 11% compared to the 53% total gain for all these guys. And then remaining 493 companies down here flat. Just nothing. They might as well just packed up and gone home in January.
Yeah, I mean, yeah, but it definitely needs to be fixed. I would agree with that.
Yeah. And this is as of June 1st. So this is actually relatively recent as far as the data goes here. So what's going on this weekend, right? The kind of anticipation of this, basically ended up with stocks all over the place. On Friday. That's why you got like a really choppy day because not only we have monthly option expiration where you had, I think it was like up to $2.5 trillion in underlying equities, like option positions on those equities expiring this past Friday. So right when that happens, it tends to stick like right around like flat.
Yeah. Okay. Isn't that called
Yeah.
something like the witching day or something?
Yeah, you get into like what's called triple witching, where you have the quarterly options going as well. This was just a single like
Okay.
monthly one, so it
Just a
wasn't like
crappy
anything
day.
like unusual like that. And then you also have like there's a yearly one too. So they kind of mixed, but what exactly are the major gainers and losers of this whole thing? So that was one of the real questions here. Is like, will this have a material effect on the stocks? And I also wanted to highlight this down here. This is a rare occurrence, special rebalance, first time in 25 years. It's happening this weekend. Kind of crazy,
Okay.
huh?
Yeah, that does. Okay. All right. I,
So the indexes and all these index tracking funds are going to be forced to buy and sell stocks and kind of move that around. There's actually some decent predictions out there. That was what the background of the main kind of thumbnail was here, looking at the different predictions as far as like inflows of cash. We're going to look at that chart here in a second. Why is this happening? This is because of the Nasdaq actually has violated this rule where they can't have more than 50% weights in like 5% largest stocks. So they're at 55% right now. So they have to trim back in order to get back under that.
so are they only going to trim well, so they're at 55, let's get below 50. Are they only going to trim 10%?
Somewhere in that ballpark. It's not a lot actually when you look at the individual things. So this is actually where the rubber meets the road. So what you're looking at here is kind of the estimated flows in terms of cash going in and out of the different companies and who's going to take a little bit of a hit and who's going to kind of take a gain. So if you're looking at it here, Apple, big dog in the room, not a whole lot of movement, 56 basis points. They're saying that about $1.4 billion will come out of Apple. because
Okay.
as a result of this. But if you go down to number 2, Microsoft, that's a much more significant impact. 2.94 percent or 294 basis points. $7.4 billion is going to flow out of Microsoft because of this. So Microsoft and NVIDIA are going to be the two biggest losers of this. Microsoft losing 7.4 billion, and NVIDIA losing 7.5 billion in outflows.
I guess, okay, so the obvious question is, how do they determine which companies to take the most out of? Because, I mean, if you look at that chart, Amazon, Google, and Apple are essentially losing 10 billion and Microsoft is losing 7.5.
Yeah. Well, wait, where do you see the 10 billion from?
No, I was
Oh,
just adding
that's
1.4, 4.8, and 4.1. I was just
yeah,
adding.
I understand. 10 billion total.
Yeah.
Yeah, I'm not really sure what drives this. They don't divulge it entirely publicly. This is the best estimation from like private kind of market. They don't have to tell you, I guess. You're just gonna have to see what happens on Monday.
Feel like that's not cool. I feel like it should be even across the board. All right, whatever. I don't.
Yeah, well, they don't want you to forerun it, I think, is the idea. So now you're going like, oh crap, like Broadcom's about to get $1.6 billion in purchases, so go out and buy a bunch of Broadcom. Broadcom was actually up Friday, because people based upon their private estimations say that Broadcom probably should be the biggest beneficiary from this whole thing. But like I said, this is just their outsider interpretation. You're going to see kind of ripple waves though too, because not only does this happen to the kind of the triple Q, but you're also going to have any other index that kind of tracks that, or any other funds that track that will have to then adjust. So it'll be a little headwind for these 7 mega cap stocks for the next couple of weeks, is what the some of the other articles I was reading were saying.
Okay. I feel like this is unfairly beneficial towards Apple, but that's okay. Whatever. It seems.
As
I mean,
Apple
they have the
shareholder,
most weight. So.
well, yes, and I actually did sell a in the money covered call on my Apple stock this Thursday, expiring for August. That would basically give me a little bit of downside protection from this. This was my thought.
Okay. Well,
Yeah.
little did you know, someone in Congress or whoever's deciding this likes Apple a lot. So.
Yep. And here is Dylan's least favorite slide, because we have something else wild going on this week. It's mega cap tech stock earnings week. All right. We got Tuesday. We got Microsoft and Alphabet reporting after the close. Look forward to listening to those kind of press conferences and seeing what's going on with those guys. And then Meta on Wednesday. There's a bunch of other companies in here.
Yeah.
No one cares.
Intel should be interesting because they're higher than they should be right now.
I probably should listen to it at this point. It's actually a great comedy. It's just like, guys, we're like this close. That's basically what they do every time.
Yeah, and then they push back estimates for 6 months. So yeah. Okay.
Yeah.
All right.
Yeah. And you're going to do a separate video talking about AI and that sort of stuff, but you're going to see how many times AI gets mentioned in these conference calls this week. Let me just say, it's going to be a lot.
Probably. Yeah. All right, guys. Have a good one.
Catch you next one.